You are living inside a $315 trillion illusion. Every country on Earth is currently drowning in debt. The United States owes over $38 trillion, the highest figure in its history. The European Union has around $14 trillion in assets. Japan owes nearly $9 trillion. Even the oil-rich nations like Saudi Arabia and export powerhouses like Germany and China owe enormous sums. But here is the paradox. If everybody owes money, who exactly is owed? If every player at the table is in the red, who is the house? The answer is not a single person or a secret society. It is an echo of a system designed 3 centuries ago, never intended to be repaid. This is the architecture of the modern world. Every war, every crisis, and every economic boom rests on an invisible scaffolding of IOUs. If you follow the chain of creditors long enough, you discover something unsettling. The world does not owe money to anyone in particular. It owes it to itself. But owing it to ourselves does not mean everyone benefits equally. To understand why your savings are losing value while the debt keeps growing, we have to go back to the moment the golden rule of history was broken. Centuries before the first digital transfer, the idea of national debt was born, not on Wall Street, but in war. In 1694, King William III of England was fighting a costly war against France and ran out of gold. Traditionally, monarchs seized wealth through armies, but England tried something revolutionary. The king turned to wealthy merchants for help. In exchange for a loan, they were promised a permanent stream of interest payments, backed by future tax revenue. To manage this arrangement, the Bank of England was created. It allowed the state to spend money it did not yet have. In return, lenders received government bonds, official claims on future taxes that could be traded, bought, or sold. This was the seed of the modern financial system. France copied it. The Netherlands refined it. The newly independent United States adopted it to fund its revolution and westward expansion. Debt changed from a mark of failure into a measure of credibility. The ability to borrow became the ability to rule. Today, that 300-year-old mechanism has become the world's dominant export. Global borrowing now increases by the equivalent of $1 trillion every 100 days. But if debt is just a promise of future taxes, what happens when the future arrives? Stick with me, because the way the system fixes this is the reason your cost of living is shifting. Let us look at the modern global leader, the United States. Its debt is not just national, it is global. People often say the US is in debt to China, and while China holds about $800 billion, that represents only about 2% of the total. So, who holds the rest of the rope? Roughly 2/3 of US investors are American banks, pension funds, mutual funds, insurance companies, and the Federal Reserve itself. You, the citizen, are both the debtor and the creditor through your taxes, savings, and retirement accounts. It is a circular mirror. Japan lends to the US through treasuries. The US lends to Europe through the IMF. Europe lends to developing nations through the World Bank. And those nations lend back to advanced economies by parking their reserves in Western bonds. It is a planetary game of hot potato, where the potato is made of promises. Every country holds someone else's IOU. A note on the echo. Understanding these historical patterns is the only way to protect your wealth in an era of paper promises. If you find these insights valuable, consider joining our community by subscribing. We do not just look at the news, we look at the blueprint. Behind every government bond sits a web of institutions, hedge funds, sovereign wealth funds, and central banks that act as the true arbiters of credit. Central banks do not merely manage debt, they manufacture it. When the Federal Reserve or the European Central Bank buys government bonds, they create new money in exchange. This is not done with savings or tax revenue. It is created digitally and instantly. Every dollar in circulation represents a unit of debt somewhere else. There is no such thing as debt-free money. For decades, this loop has sustained itself through confidence. As long as investors believe governments will pay interest, even if they never pay the principal, the machine keeps turning. In the 21st century, debt is not designed to be repaid. It is designed to be rolled over. Governments treat debt like a rolling subscription, issuing new bonds to pay off old ones in a process called refinancing. The global economy now depends on the rent charged for stability. The system depends on governments never paying off their debt, because if they did, the world would lose its most trusted financial instrument and collateral. Every system has a breaking point. We have seen the echo fail when confidence wavers. Greece 2010. Debt became unpayable, prompting bondholders to panic. The rescue came with austerity, tax hikes, spending cuts, and mass unemployment. Argentina 2001. The largest default the world had seen, led to frozen deposits, violent protests, and political collapse. Sri Lanka 2022. The government ran out of foreign currency to service loans, leading to fuel shortages and the president fleeing the country. These crises show that the global system depends on one's silent rule. The future must always be larger than today. We need more workers and more taxpayers to support the debt. But we are hitting a wall. Something new is challenging this assumption. Artificial intelligence. While tech companies pour billions into AI, experts warn that 30% to 50% of entry-level white-collar jobs could disappear by 2030. Machines do not pay taxes. Fewer workers mean fewer wages and lower borrowing capacity, weakening the very foundation the debt-driven system depends on. The debt system thrived in a global structure where the US issued the reserve currency, China was the factory, and Japan supplied capital. But that trust is fading. Trade relationships are taking unexpected turns, and governments are questioning the system itself. Should global reserves still depend on the US dollar? Even Japan, the hidden lender that provided the world with cheap money through its zero-interest rate policy, is seeing its system strain. For years, global investors used the yen carry trade to borrow at near zero interest to buy assets abroad, but as Japanese bond yields rise, that cheap funding looks less certain. When leverage starts unwinding, it rarely happens slowly. So, who is the creditor? The creditor is not a hidden empire, it is the system itself. It is a network of governments, banks, and institutions, all holding each other's promises. When we say we owe it to ourselves, that is only half true. Interest payments do not flow equally through society. They flow upward from taxpayers and workers to the institutions and investors that hold the debt. Debt is a transfer between classes. This is why global inequality and global indebtedness rise together. The plan was never to pay the debt back. The plan is to keep the world believing it will. It is a closed loop of trust, but trust is not evenly distributed, and once belief fades, the numbers stop mattering. Debt once meant bondage. Today, it means balance. But if that balance ever tips, the illusion ends, and we will remember what debt really is, a promise that cannot be kept forever. If this gave you a new perspective, hit subscribe. History has the answers, and I will show you where to look. Drop your thoughts in the comments. How long do you think the world can keep believing the system will hold? See you in the next video. History does not just repeat, it rhymes. So make sure you are listening for the next Money Echoes. Subscribe, and I will see you in the next one.